Okay, all right. We leave it at that, sir. Thanks a lot for joining in. That is Equitas Small Finance Bank saying that the demand for the informal economy that they cater to, the borrowers, continues to be very strong. Deven, any thoughts on this stock and the commentary that the management made?
So I think the real challenge hereafter would be how do they manage the liability side? Because on one side, the cost of fund has started increasing and it is unlikely to settle down at lower levels, I think, at least in the near future. Given that scenario, I think most of the banks would be probably challenged to keep the cost lower as far as I think the funds are concerned. So I think they would have better ability to manage the cost as far as operations are concerned, but I think the cost of funds would remain on a higher side. That could possibly put the pressure on NIM. I think particularly for Equitas, I think somewhere in 2018, I think the NIM was somewhere below 7. Today, I think this is somewhere in 7.25, 7.5 range. I guess I think this particular situation would probably play out. They should be from April to June quarter onwards. I'm expecting, I think, a larger pressure on NIM coming for them. They are growing at a reasonably high growth rate. That is a good sign. But I think the cost of fund probably would be the issue which could affect the margins. But overall, I would think that I think the margins, or rather I think the valuation-wise also, this particular bank is reasonably quoted at a lower levels now compared to what it used to in past. So from that perspective, the downside remains limited, and the upside I think would depend largely on the factor of NIM, as I said.
In the defense space, the order wins continue to come through. So BEL has just signed a fresh MOU as well. But as we know, the stock has already seen a big move, right? I mean, in the last, since 2021, Jan of 2021, BEL has almost doubled. Do you see more upsides here for any of these defense names?
On one side, the volume growth will continue for most of the companies because they have got a reasonably good visibility about the order book. Most of the companies in defense would talk about, I think, higher amount of visibility of order book for next few years. So that is not a challenge. Challenge would be on margins. And that is where I think one will have to remain, I think, a little bit moderate on expectation as far as the company's earning growths are concerned. Would think that these companies, particularly I think many of them in the defense space, I would think that I think the margins would be a good amount of challenge that they will have to face, not the business. Business will continue to roll. So in such situation, one will have to buy these companies when the stock is available at a valuation which is more comfortable going forward. Currently, as I see it, many of the defense companies which have already factored in the larger amount of growth, and as a result of which valuations are reasonably at a higher level. So from that perspective, one would like to wait and buy, I think, during the correction in some of the select ones. We like companies like Solar Industries in the defense space, where it is remaining relatively more stronger proposition. But valuation definitely, I think, is on a higher side. So corrective valuation would mean a buy opportunity eventually.
Any specific thoughts on data patterns, Deven? It sold off some 6% yesterday. It's been under pressure 2 days now. Yeah.
Yeah, honestly, I think I have seen both data patterns as well as BCX systems. Both these companies look, I think, reasonably good from the comparison point of view as well. DCX, I think, particularly about data patterns, I find relatively better at this point of time. But what I would like to see is, I think, a couple of quarters of the billing cycle. I think in particular, this particular quarter, the March-ended quarter, is expected to see the larger amount of billing as compared to the previous 3 quarters. And that is a kind of lumpiness that I see in the business, which is not something very good for the working capital cycle of the working capital requirement of the business. I would rather like, I think, since they are newly listed and I think relatively recent companies, I would like to study, I think, how exactly they manage this particular part in at least 1 or 2 quarters from now, and then probably take a call. But I do like both these companies from possibility of investment into the portfolio.
All right, Deven, we'll leave it there. Thanks very much for joining us. Good speaking with you, and it's a pleasure as always. Well, we will take a quick commercial break here, but before we do that, let me quickly tell you what is lined up over the next half hour of the show today. Coming up, Anuj will join in for a quick trade setup. Post that, we'll get you the top stock picks for the day from our technical and futures and options experts. We also decode the stock rally with on Momentumizer segment, and right before markets open. On the stocks board, CNBC-TV18 stocks board, we will highlight the top stocks and news to focus on with regards to price action that is expected. Stay tuned.